Good afternoon and welcome to our value series for private business owners, Getting Your House in Order, Preparing for Business Succession, hosted by PKF O'Connor Davies. All attendees are in listen mode only. Before we get started, I'd like to go over a few housekeeping items so you know how to participate in today's call. We've taken a screenshot of the attendee interface and you should see something that looks like this on your own computer desktop on the right-hand side. You will have the opportunity to submit text questions to today's presenters by clicking on the questions button of the control panel. You may send in your questions at any time during the webcast. We have a lot of material to cover, and if time permits, we will make an effort to respond. If we cannot get to your questions, a response will be sent post-event. A copy of the PowerPoint slides, a recording of today's webinar, and a handout relating to our Center for Private Business Owners will be made available to you via email a few hours after the event. At the end of the webinar, we do have a very short survey which will be prompted and your response is greatly appreciated. At this time, I would like to introduce Cynthia Adams Harrison, Managing Director of the Center for Private Business Owners with PKF O'Connor Davies. Cynthia?
Hi, thank you so much, Harleen. Thank you everyone for joining us today. We're very honored that you took this time out of your day to be with us. And we are here to get your house in order and prepare for business succession for the private business owner. I am thrilled to be Managing Director for the Center for Private Business Owners for PKF O'Connor Davies. And PKF O'Connor Davies has an established and enduring history serving private business owners. Our firm has one of the most comprehensive backgrounds for the private business owner sector. The Center for Private Business Owners is recognized for its dedication and experience with which we assist our clients in this unique arena. Our accomplished advisors develop an astute appreciation of each owner's business, personal, and generational priorities in order to provide the broad-based services that help owners align and achieve both their professional and personal goals. With experience as deep as it is diverse, our team of professionals is qualified to assist with and deliver fully integrated solutions to address the issues facing today's business owners. And the topic today is really about looking at change, because everything that precurses any transition or succession is all about change. And so that theme will permeate this entire webinar in terms of preparing. We're going to introduce you to the stages of change, and we're going to do it in 3 different modalities: the emotional and relational dynamics that are involved in any transition, the strategic and financial business decisions needed to prepare for succession, and personal and financial wealth transfer considerations, and actually helping you with a roadmap to help you get further down the road on succession and transition planning. So with no further ado, I would like to introduce my panelists, and I am honored to have Tom Davidow, who, let me just say, it has been a joy working with all of these people. I know all of these people personally, some for more years than less, but every meeting has been enjoyable and it's been fun, whether it's been collaborating on client situations, scenarios, professional conferences. I've enjoyed every single minute of being with these people. Thomas Davidow is my mentor. Okay, without Tom, I wouldn't be doing what I'm doing today. And he was my mentor 25, 30 years ago in the practice of family business. And I accidentally ran into Tom, and he has been a mentor ever since, and moved from my clinical work and sports psychology into working with family-owned enterprises now for over 25 years. And that's all due to Tom Davidow. He's a clinical psychologist with a concentration in family systems. He transfers that skill set into working with family-owned businesses, and he's been doing this over 35 years. And again, he and I have worked together from South Africa to Wyoming and everywhere in between. So I'm honored that he has joined us today. John Shillingsford and I have worked on a number of client cases. I am honored that he is a colleague of mine. He's probably one of the most enjoyable people that I've had the pleasure of meeting at PKF O'Connor Davies, and I consider him a friend as well. John is a partner with PKF O'Connor Davies. He's got over 30 years of professional experience in accounting, auditing, and taxation for closely held businesses. His wide-ranging client base includes manufacturing, wholesale, distribution, professional service-based companies. John assists and advises closely held businesses in succession planning, whether by sale or transition to the next generation. He has developed a strategic M&A data book, which is phenomenal, which we'll talk about in this presentation, for the closely held family business to facilitate successful transition as well as maximizing value and preserving wealth. John is a CPA. He's accredited in business valuation as well as a certified fraud examiner. And now to another favorite person of mine, Maria Bronzi, who is with Altrium Well. She is just a joy and sunshine every chance I get to be with her, and I have come to admire her very much in not only her work, but in who she is as a human being. So Maria, thank you for being here. She's partnered with Altium. She's been with the firm since 2014. She works directly with the team at PKF O'Connor Davies and acts on behalf of their clients as an advocate within her firm, ensuring that the proper team is assigned, their purpose for money is clearly defined, and that their intentions and goals are at the forefront of the planning process. Altrium has a firm commitment to client-centric model for service at its core and shares its unique team approach with PKF O'Connor Davies. Thank you so much, everyone, for being, I'm so honored that you are here with me. So we are going to move right into the stages of change and how we are really using this as a platform to have a continued dialogue as we move into the presentation. So we'll go right into our chart on stage. Let's talk about change a bit. One of the things that's really important to remember, and the reason why this platform is being used, is because you don't just raise your hand and say, yes, let me think about change, okay? Whenever we look at succession or transition, it's very difficult for a private business owner to say, let me think about transitioning my business, because it's usually their pride and joy. Oftentimes in the family business world, we look at it as a third, fourth, fifth child. So it's very normal to push back whenever we begin to think about what am I going to do with my business here. So introducing the stages of change helps us identify what's going on in any given moment along that course of change, which can help you actually move from one stage to the next more easily. So when we look at change, these two great guys, Prochaska and D. Clementi, came up with this chart of change back in 1982. So it's 40 years old, a little over 40 years old. And it seems to work with almost everything. It really settles itself within behavior, and we look at behavior in setting up each stage. So when we look at pre-contemplation, it's really a stage of denial. It's a stage of really nothingness, I guess to say, because no one is really thinking about anything when they're in the pre-contemplation stage. But there is a stage called pre-contemplation that precedes contemplation, which is usually triggered by something. Somebody may say something at an event you're at, and it may start to settle a little bit and go, maybe I should start thinking about change. Maybe I should start, Googling and, what are some suggestions from trusted advisors when I look at this contemplation stage. So we're not saying I'm in the contemplation stage. We're saying, I'm thinking about change. What do I need to do? Preparation stage is when you move into and you really are exploring. Perhaps you have hired advisors, perhaps you have created a plan, and that's really where you're moving into action, the doing, and that's the next stage. The fourth stage is the action stage, and that is making change and taking charge. I love the taking charge part, because that's really about how do you assimilate all of the advice you've received and make your own personalized plan for change. And you're in the action stage of actually the doing piece of that. And we're going to go into this in much more detail from each one of our experts in what might be going on within each phase given their area of expertise. The maintenance stage is continuing to move forward with decisions that have been made, strategies that have been implemented within your organization, within your family. Both the family and the business are going through these succession and transition changes simultaneously many times. And so we need to continue to move forward, supporting both venues for movement toward your goal, whatever that might look like and feel like. So now I'm going to turn this over, and Tom, Maria, and John are going to give their little areas of expertise as they relate to change and what they're really here to help us do. Tom, would you like to begin for us, please?
Yes. Cindy, thank you for your kind words.
Oh,
All I did was provide opportunity. The achievements are your own.
oh, geez. Well, thank you. Thank you, Guru Boss. Yeah.
So I started this. I started out as a clinical psychologist, concentrating working with families and children. But I also had an adult practice, and people would come to me and start telling me these family business horror stories. And I started thinking about, I wonder if something had happened earlier in the process, had they been able to catch or stop the spiral of negativity that started in this family business conflict. And so I took that idea and asked a bunch of people, and they all said yes. Family businesses can frequently have a lot of conflict and struggle with a lot of things, and so providing them services to understand the family dynamic would be a good thing. That was over 35 years ago, and that's what I've been doing ever since. And in terms of the concept of change, that's the drive. Family, it's going to require a combination of family dynamics, family communication, working hard, and business. There's going to be some changes in the business in order to accommodate the changes in the family, etc. And then obviously, Maria's area, you really want to plan for your future to make sure that at some point in time, you're independent and you're feeling good in your family, you're having some degree of financial independence.
Great. Thank you, Tom. John, let's hear from you on.
Well, thank you, Cynthia, and your kind words, and as I echo Tom's comments, are greatly appreciated. Although we've only been working relatively for a short period of time, the synergies that we have are endless, and that goes with Maria as well. When you hear from Maria, I haven't worked with Tom yet, but just putting this together, there's synergies there as well. As Cynthia mentioned, I've been advising family-owned businesses for approximately 30 plus years. And as you're going to hear, change is very common in daily life, let alone business and family life. In fact, in my own practice, since I've been practicing, my practice area has changed dramatically. And the old days of the tax returns and the financial statements, although a tool and a compliance deliverable, as we say, are kind of morphed into commodities at this point in time. And what clients and business owners and families are looking for is that proactive, non-commoditized service that the professionals bring to the table. And it happens to be helping clients succession, whether it be by exit, of an outright sale, or generational succession planning. So my practice has changed, and I've adapted to change over the years. I went through all these stages as Cynthia has up on the screen, and now I'm in the ongoing maintenance stage, as they say. So the chart does work in all aspects of family and business. Clients, I think, in general, need to be educated on this holistic approach to succession. If they don't understand the holistic approach and what it means to them and their families, then just getting out of the gate on pre-contemplation and maybe even contemplation stage may not even occur, right? So it's really important for the advisors and the team to educate those that are in business the importance of succession. So as just to lead into where we're going to go, and you'll hear about it later, some of the things that I would say we should consider is having a well-defined succession plan on the outset. And that essentially occurs on the formation of the business, believe it or not. People will look at me and say, you're crazy. I'm like, no, that's not really being crazy. That's being realistic. If I'm starting a business, I ultimately have an end game for that business. And that end game is either monetizing it, outright sale, or preserving it for the family. So well-defined succession plan early and often, have your house in order, which we're going to talk about, and Cindy alluded to in the opening. Identifying the professional team, your partners that will help you through these various stages, be your oversight and your counseling and your guide and support. Then, of course, follow through and taking action is really critical as well. So you'll hear a little bit more about these topics as we get into it. Thank you.
Thank you, John. Maria, we'll turn this right over to you. Thank you.
Thank you, certainly, for your kind words, but everyone at the PCAF firm, we are just so grateful for the partnership and the relationships that we've built with the partners. And really, we're also super grateful for the clients that we've been able to serve since 2010. And so what Altium Wealth does is we guide purpose-driven individuals through complex decisions. We help empower our clients by creating clarity from chaos, and we all know that sometimes change can create chaos. And so we do financial consulting, asset and wealth management for high net worth and ultra high net worth individuals and families, as well as complex estate planning strategies. Currently, our firm manages about $4.7 billion in assets under management, but we advise on over $10 billion in assets. We have a team of just over 40 people. We are what's considered a registered investment advisor. And so basically what that means is we act as a fiduciary on behalf of our clients. We do specialize in working with owners of privately held businesses, real estate owners, developers, and property managers, as well as high net worth families and ultra high net worth W-2 wage earners. And that's who we are, but what we do and how it really relates to you is that we take our clients through a process called Vantage Point. And so Vantage Point kind of takes you and mirrors all the different stages of change. It's a clearly defined process, but it's very customized for each individual and families. And so as John and Tom are really going to focus on the dynamics within the business, what we do is present a picture of you for your personal family enterprise. Same way a CPA or an accountant works with you to create your business financial statements. Our process allows you to look into the future to create a strategic plan for the family. And it's based on your current circumstances and, most importantly, where you want to be or what it will look like in the future. We work with families in all stages of wealth, the accumulation phase, distribution phase, and the conservation legacy planning phase, which again mirror all the stages of change that Cindy's already discussed. So you understand, as a business owner, businesses go through startup stage and growth stage, maturity stage, and then renewal or decline. And most business owners have acted as the CEO, leading all of those different stages. And typically, they all really require you to lead differently, respond differently, and plan differently. And sometimes they require a different team for you to surround yourself with as you're going through those different stages. And it's the exact same with your personal financial planning. But most business owners don't really have the time to lead both, and that's where we become very valuable. We act as a co-leader of your family enterprise, where you still get to make all the decisions, but we provide information in a format with a lens to the future. We help you look forward on a personal level with a future-looking lens that CPAs are very well equipped to do on the business side. And that's really why the partnership exists between Altium Wealth and PCAF O'Connor Davies. So basically, you're the CEO, you have your COO, you have your CFO, you have your head of HR, and these individuals help you execute your vision for the business, and in some cases help you execute your vision for change, and you work together to see how you're going to accomplish that. All these individuals come together to look at the company as a whole to create success. We do the same thing on the personal side. So ultimately, the business owner still gets to make the decision, the ultimate decision for the family enterprise. We just bring you different perspectives, show you how those perspectives work together, and then how to move forward. What I would say is that change creates emotion, which is really why Tom is here. And what John does on the business side and what we do on the personal side is really help remove emotion and provide you with facts, a lens for the future, and clarity for each moment of change so you can move forward in the most successful and efficient way.
Thank you. That was awesome. And moving right into having more conversation about this, as you set it up beautifully, Maria. You know, I'm going to begin with questions that address each stage for each one of our panelists. So as we do that, you'll get a clear idea, given these different areas of expertise, what might be occurring in each stage. So we're going to address pre-contemplation, which is kind of an interesting stage because there's nothing really going on in there. But coming from each one of your specialties, let's talk about what that means to you. So Tom, all right, so if someone is not currently considering change, what's going on for them psychologically or emotionally?
Well, you know, I think you used the word before, the word's denial, but there's usually, when we're talking about, in this situation, pre-contemplation stage, I think I'm talking about the decision maker, the matriarch or patriarch, or the head of the business, the owner. That doesn't mean that there aren't other people in the family who are in the contemplation stage or the preparation stage, etc. So sometimes I'll get phone calls from an individual talking about they'd like to start the succession process. And I say something to the effect of, well, the whole family's going to have to gather to address that issue as a family, because if it's going to be a family business, everyone has to agree in order to move forward. And they'll say something like, my mother or father will never agree to that. Well, then it's not going to happen. And I don't take the case. The point is that if the decision maker is in the pre-contemplation stage, that doesn't mean that other family members could be in different stages and start to initiate conversations, if you will, or communication, or try to talk to that individual in a way that gets them or pulls them out of the pre-contemplation stage and into the contemplation stage, where the reality is that, you know, nobody escapes this life. You know, we're only here for a period of time, and face that reality and want to plan for that in some form in order to make sure that your business and your family has a successful transition into the next stage. Sorry.
Great. Thank you. John, so given pre-contemplation, what might we see in the business landscape that you could identify? Yeah, someone's in pre-contemplation right now.
It is an interesting stage. I will say, just from my practice and years of meetings with clients and being their partners, the pre-contemplation stage, as it's defined here, is basically on our agenda almost every yearly meeting or more frequently, right? We are constantly talking to the owners about, what are you doing over the next 3 to 5 to 10 years? Are you thinking about succession? Is your personal succession planning documents up to date? So these are just ongoing discussions. And one of the things, I mean, a lot of characteristics come out of that meeting. And just to mention a few, they're defending the status quo. Everything's good. I don't need to change. The business is doing well. My lifestyle is good. They'll talk about, well, I don't know if I have the right family, lined up for the next leadership. So these are all conversations that we need to have and kind of take it out of the financial discussion and talk about their legacy or their business and moving that business to the next generation, preserving the wealth, right? The years of hard work that have gone into what they have developed needs to be protected, or monetized, or what have you. So they defend and they rationalize in their mind that everything's okay. They don't need to change. They're afraid of change. They're not sure how the other family members, to Tom's point, might react to change. Again, there might be issues within the family that need to be, addressed. Cindy, as you well aware, you're working with me on one of a mutual client where they have that those exact issues, and we're working through that, and you're doing a great job with that. And I think it's important to communicate regularly to the business owner and remind them and the family that the business cycle is constantly changing. Mm-hmm. It's changed from when they form the business and they come to work every day and they do what they do, facing change and challenges. So change is not new to them. It's just a matter of embracing it and protecting what they've built all these years and transferring it to the next generation, right, in the most tax efficient manner. Okay, so it's not a hard conversation. It just has to be constantly revisited. It took me, on one particular client, it took me about 9 years until I put it onto a whiteboard that says, if you do nothing, everything you worked for, this is how much is going to go to the government. That's all I had to do. And the zeros and the numbers were, kind of endless, and they got scared. So we started the process, and we're moving forward. But that's kind of what we see. Their failure, their fear of failing and change, and maybe not having the right next leadership within the family kind of identified and maybe mentored in yet.
Mm-hmm. All right, great. Maria, so what do you think's going on here on pre-contemplation and nothing's going on, and what's happening on the personal side?
So I want to answer that question, but I want to make a just comment about what John said is, for everybody on the call, John said, people, they were scared, right? So they were acting out of fear. We want to meet you. And when I say we, I mean all of us. And whether you use us or counterparts, we want to meet you when you're not scared, because you make much better decisions with more information. And when you have that abundance mindset, to move forward, like you did when you started the business. And so to answer your question, what's going on in a business owner's mind when they're in the pre-contemplation stage, or they're not considering change at all? Well, most of the time we see the business owner, they're in startup mode or they're in growth mode. Their heads are down and all they're doing is focusing on their business. How do I grow this business? How do I keep this business? They're not even thinking they won't be in the business any longer. So everything is done how it relates to the business and within the context of the business. Most of the time, these individuals are spending very little time on anything outside of that circle, whether it's relationships or their personal family enterprise. And the risk there is a lot of times that personal family enterprise is growing at the same rate that the business is growing. They're just not paying attention to it. So we run into individuals who haven't paid attention to it and they've done no planning. We run into business owners who are worth tens of millions of dollars, and John can attest to this. They don't even have a simple will, right? Because they're not thinking about it. That's one of the things that we see. Another thing we see is they've invested their assets, but they haven't necessarily invested them with a firm that has the ability to grow with them or flex with them. And we all know owning a business, there's a lot of flexibility involved. So, they may have done some things, but there's not a plan in place, right? Everything feels very disjointed. There's no overarching strategy or a strategy within tactics underneath to execute against. It's just, I have to grow the business. I'm going to focus on this. I'm going to run as fast as I can to growth without thinking through, okay, what happens when I get to a certain point? That's really what we see when they, are not considering change.
Okay, great. And for whatever reason, something triggers in the private business owner that gets their attention, and all of a sudden, Tom, what begins to happen emotionally, psychologically. That's a pretty big step, you know, from either denial or just nothingness to
Yeah.
moving into a place where now we're contemplating what is, if I'm watching somebody, what am I seeing when they're contemplating something?
Well, let me put it into a context. I mean, in family businesses, there's your family, there's your business. That's it. I mean, that's your whole emotional life
Mhm.
is with your family, and the emotional attachment to your business is also very strong. And all family members who are in the business, even family members who are not in the business, are all emotionally attached to the business itself. And frequently, in many communities, the business is the identity of that family, who they are, what they represent, their value systems, all of that. So that's a lot that's there. And at some point in time, those emotions start to bubble up, because you care a lot about a lot of different things. And some of the things could be going on that could trigger those emotional attachments. And one is pain. Pain's a wonderful motivator. Pain in the family or pain in the business, one or the other.
Mhm.
And also, people sometimes, with that strength of that emotion, start thinking about the future, and they start to think, uh-oh, if I don't do something about the future, then we could get ourselves in trouble. And so that they start to contemplate from within that context.
Right. Thank you. Thank you, John. So as an owner begins to think about change, what might you see, what are they looking at within the business? What should they be looking at? But what typically are they looking at when they're, what are they researching? What are they Googling? What are they looking at in terms of business documents, business strategies? What begins to happen as we flip into, now I'm thinking about change?
That's a good question, and quite frankly, not to muddy the waters for today's presentation, but when there's a contemplation discussion, we have to talk to the business owners or owner about what is succession in their mind, right? Is succession an outright sale of the business, monetizing the business? And I'm going to talk to you about my next discussion when that is brought up to us. Then you have the generational succession, which is another conversation, because there you could have family members in the business already, and you could have family members that are not in the business, to Tom's point and Maria's point, right? And so now you have this, well, I got people in the business that are going to be potentially the next leadership here, and the business is worth X, and I got ones that are not in the business. So now that creates a little bit of a discussion, maybe some animosity, who knows? But that has to be discussed. Or, without getting into details, they could always explore an ESOP, which is always brought up as an option for them, because that is an option, and it's viable in a lot of cases. So without getting into the specifics of an outright sale versus generational succession, we talk about when you contemplate a sale. I've had this question a million times. I'm thinking about selling the business. So, and believe it or not, I do keep track of this. So I will say to the owner or owners, I say, that's great. We can help you do that. We can efficiently transfer the business either to the next generation or an outright sale. But here's my first question for you to think about and maybe give me an answer. Without talking about the first 6 months of after succession, right? We know you're going to boat, you're going to travel, play golf, and all this other good stuff. What is your plan after that 6 months? What are you going to do that is going to now replace what you've been doing for the last 20, 30, 45 years in the business? And that's a question that a good percentage, 90% of the time, cannot be answered at that point in time. They don't really know. All they know is they want a succession plan. So that in and of itself creates a discussion, because we all know that once you remove yourself from something you've been doing for a very, very long time, it could have some repercussions, and we want to plan for that. So we have those discussions. We talk about the business legacy and the family and preserving the wealth that has been obviously accumulated and built up all the years. We need to identify who are the next leaders within the family. Like, do we have the appropriate family members lined up? Are they in the business? At what stage are they within the business? Okay, because that's really important. If that has not been identified yet, then we have another discussion. Or do we want to do succession within the family, or do we want to then market the company for an outright exit and sale? What does the future look like? What are their ultimate goals? Right? You spent 30 years building a business. Do you want it to continue for the next 30 years? So these are all the things that in the contemplation stage we talk about. I'm just going to dive into what has already been mentioned in the opening comments of what we call having your house in order. I think that is, in my personal opinion, I think that's probably one of the most important discussions, because if your house isn't in order, what are you then succeeding? What are you transferring? What are you selling or moving on to the next generation? Having the house in order, and I'm kind of babbling a little bit here, but over the years, a little pet peeve of mine is this, what I refer to, and Cynthia referred to it as, a data book. Most of it's electronic these days, but I do have some clients that like it in paper, believe it or not, but that's just a personal preference. And what the data book is basically this business in a complete document, from its inception to where it is today, and basically will satisfy, in most instances, almost like a level 1 type of due diligence if you were going to exit the business with an outright sale. So that data book, once the investment is made, is a document that can be maintained and updated every single year, even when new family members come in and succeed the founders. And it's just a great tool. It's money that can be realized on an exit real time. The buyer's not waiting for information. You're giving them, you're being proactive in building this data book that really will facilitate value. And I think also identifying the professional team, as we've been talking about, I think that's really critical. You have to get everybody aligned, collaborating, goals have to be, outlined, and everybody has to be connected and on the same page. Back to Tom's point with the family members, wanting, not wanting, all that is in that contemplation stage. So a lot of stuff, but depends on what the direction of the owner is at this point.
Absolutely. Thank you. That's great. Maria, what are you seeing on the personal side when we're now getting the wheels turning and thoughts are coming about what needs to happen or what could happen or should?
So again, most business owners become all consumed with whatever the next thing is in front of them, right? So when they hit this contemplation stage, they're like, oh, I have to consider, to John's point, am I going to do a generational transfer? Am I going to do an outright sale? And they think these things through on the business side. When we meet potential clients who are really starting to seriously consider what a change would look like, it's rare that they realize they have to give their family enterprise the same amount of time and attention at a very granular level. They need to understand what the change would allow them to do or not allow them to do. What is the best option, to John's point, and not just for the business or family members in the business or family members not in the business, but what is the best option for them based on a whole bunch of variety of circumstances. So they have to put the time aside to actually give it thought. And what we have found, and this is like a big concern, by the time the business owner gets to us, they've signed contracts, they are 6 months out from receiving X amount of dollars net after taxes, and we sit down with them and say, not enough, right? Because business owners receive so much cash flow from the business typically, and sometimes the enterprise value of the business isn't sufficient enough to maintain their lifestyle. So on multiple occasions, no matter how excited they were about that dollar amount, we've had to tell them, let's pump the brakes. Let's actually plan on what this is going to look like. Because if the cash flow of the business exceeds what the enterprise value is, and then what they would be receiving net of taxes, no matter what type of portfolio is constructed, they still need a plan that can get them where they need to be or help them decide whether or not they should even move forward with the transaction. So knowing and having this information prior to go into a potential transaction is really what's so important. We can help with that. You know, we're not going to say, here's how you should structure the business change, but we're going to say, based on these different options, here's how it's going to affect your personal family enterprise. And I think, you know, there's so much that needs to be considered. And the business owner, you know, I have folks say to us all the time, I want you to meet with this person who owns this business. However, they haven't decided what they want to do yet, so they're going to wait to do the plan on the personal side. It's not a good idea. We have so many times have sat down with people and said, it sounds like a really great number for your business, but unfortunately, this is not what you need to continue your lifestyle. Or they haven't gone through to say, this is good for me. I will be able to maintain my lifestyle. So going back to what Tom has been talking about, the personal emotions that are in all of it, they are still unaware of whether or not it's good. Where will I wind up? So the emotions hold them back from making a decision that really could be the best decision for them and for their family, most importantly.
That's great. That's great. So now we have begun thinking about change, researching different options, suggestions, going to advisors, talking to our leadership team. And now, as we prepare and get ready for the change, we begin making plans. So what does that entail for all three of you? Tom, when do you know someone is absolutely ready and they're diving in and beginning to truly make plans?
I would bifurcate really ready and anxious from making plans. people, I think we're in a situation where it's a have to versus a want to. And one of the things I want to share though is that family businesses, there are just two systems. There are family systems, there are business systems, and in the family you make family decisions, in the business you make business decisions. When you're a family of businesses, it's very difficult sometimes to separate those two. There's a level of ambiguity that exists in all family businesses. That ambiguity can create conflict, misunderstanding, stress, etc. The thing that I want to share with you, the overriding principle is that's normal. It's normal. If you're in a family business, you're going to be experiencing all these things. I mean, it's like if it's raining outside, you go outside, you're going to get wet. That's it. So if you're in a family business, you're going to have these struggles. There's no way to avoid it. At that point in time, hopefully you've now talked to some people, you've done some contemplation, and you're ready to do some preparation. So one of the things that you want to consider, and I mean this seriously, you know those advertisements when you see people, professional drivers driving raceways or whatever it is, and they say, these are professionals, don't do this by yourself. It's the same kind of thing with family business succession. I'm telling you, it's really complicated. Extremely successful people who have mastered almost everything bump into a stone wall and they can't figure out why. It's just who you are and the role you play, and it's just you're in the most difficult position to conduct the succession process. So at that point in time, it would be good to alert your advisors or bring in people who can help you navigate these waters. It's always tricky. There's no such thing. It's always rapids. It's because it's change. I think it was Maria that said something about chaos and change. There's a level of chaos and a level of change that accompanies it, but that's okay. You know, it's about continuing to understand that what you're going through is normal and continuing to seek advice from others as you plan your succession process.
Great, thank you. John, so what are we seeing active in the business at this point? when we know an owner is ready for change and they begin making plans? What's going to be involved in that making plan piece?
So it is a process, without question. It has to be a controlled process. We act as an assistant to the GM, who is the business owner, right? We are engaged to keep it controlled. We don't want controlled chaos. We want controlled process, right? And we walk them through that. We have a timeline. It's a number of things. I'll mention a few here just to kind of give you a flavor. But this is the point in time where you actually have to identify in place that professional advisory bench, right? It's got to be, it could be 3 of us on the phone or any mixture thereof. But you got to have the professional team in place. You have to be aligned. The family has to be committed. As long as the business owner as well, they have to be committed to the plan. So we're having these discussions. We're talking about a readiness assessment. So the readiness assessment really helps us determine with the business owner, is the company ready? And if it's not ready for succession, no matter what succession route you're going to take, whether it's generational or outright sale, we can help and prepare that company with its management team and the owners to be ready for that succession. And it's all a timeline. We have accountability benchmarks. We have people that are going to be tasked with certain things, and we kind of hold everybody's feet to the fire, if you will, because that's how things get accomplished. I just want to take a step back to what Maria said, which is really important. So, and Tom as well, the emotional versus, the business versus the family decisions. I've had clients say, someone approached me and they're willing to give me X dollars for my business. And they're really excited about it. They didn't think they would ever get that amount of money. And my discussion with them is, well, let's sit down real quick just to give you a flavor for where you're at. And let's just normalize the profitability of the business. So because the business is generally supporting 1 family, 2 or 3 families, right? So if someone's going to offer me X dollars today, and I normalize that profit and say, well, I could work another 2 years and get the same amount of money. Why would I sell it today? You know what I mean? And continue to grow the business and make more money down the road. So the multiple has got to make sense. And that's where the education comes into play when you're sitting down with the owner to go over this. Tax efficiency discussions, very, very critical. You're going to sell your business and give all the money to the government? No, I don't think you're going to do that. We're not going to let you do that. So we want to be tax efficient on whatever plan and path they decide to choose. Cash flow, again, is another critical element. If you're in the preparation stage, if you're doing a generational succession, can the business, if it's going to be paying for this buyout or succession, can it continue to operate, accumulate wealth, and also de-equitize the family owner? Any access to capital is critical as well. And we go through all the agreements. We want to make sure the house is in order, all the proper agreements are in place, current, they mean something, they're signed, they're executed. A lot of companies and clients will have these documents and they're all good, but they haven't been executed or even signed. So they really don't mean too much at that point. So preparation stage is where we get into the meat of the succession.
That's great. And Maria, so when someone's ready for change and they're considering their personal family wealth, what begins to occur so that they can begin making plans? What kinds of things will you assist with?
Well, to John's point specifically, he just said, they need a team. They need a team around them. Accountability is so, so key. When we first meet with our clients, we say, we are going to be your accountability partner, right? They need a team around them that will create a plan that talks about risk mitigation and cash flow and all those things. But then once we've decided, okay, what do the assets look like? They need a team that will design a portfolio that supports their plan, not the other way around. Because a common disconnect that we find with new clients is that they have this portfolio that's been created from some money manager's investment committee standard somewhere. and they kind of have a one-size-fits-all application. So they typically split up portfolios 4 different ways. They're designed for the masses. They're not specifically designed for this individual family enterprise. And the real secret, I think, in what we do, or what any good advisor does under the family enterprise, is really how your plan and your portfolio get re-optimized together on a regular basis. You know, for us, what we do, we have, it's really a top-down approach. It starts with our internal investment committee. So we look at, how do you access the capital markets? What asset classes should you be owning? What types of weightings? What type of various portfolios are, you know, available to you? We look at current market performance, inflation rates, what we see happening in the future, the cycle of the economy that we're in. We look at all of those things, and then we distill it down into the plan. And then using those tools, we use assumptions to project out what the portfolio will do. And then based on client experience, how we're going to manage that in such a way that it's optimized. And as everything evolves outside your family enterprise, within the family enterprise, within your portfolio, we are constantly looking at that feedback loop between how are you going to, once you change the structure of your business and where your cash flow has come from, how are you going to create the same type of income flows and change it as time goes on, because things change, right? Your plan will evolve, your income changes, your expenses change, the market changes, you have different experiences. So it's really important that once you know you're going to take this step, that there's a plan in place that is a dynamic plan that can change with you as time goes on. Because to John's point, the structure of the business changing is not the end. It's just change, right? You want to continue your lifestyle. You want to continue to have relationships with people. And so you want to, you know, do it in a way where the relationships are kept healthy, where the cash flow is kept healthy, but where things can move and flow together. And so you need to work with individuals that have that loop between, how am I going to create income now? And then how will I change the income over time if it needs to be changed, and what does it look like? That's really, I think, what's most important as you say, I'm going to do it, I'm preparing for it, and this is what it looks like.
All right, wonderful. That's great. That's great. And so with all this wonderful advice and preparation stage, we now move into the action stage. So people are actually doing the do, and they are taking their plans and creating movement for those plans with family, with leadership, within the business, obviously, within their advisors. So when we look at the action stage, they're making change. They're taking charge. Tom, what is happening physically, psychologically, emotionally during this phase? What do you
Okay.
predominantly?
So, people, they're communicating. Okay, that's number one. They're communicating a lot more, and the quality of communication is significantly higher. Okay, that's what's going on. The other side of it is, people probably think or say, what are you talking about? People don't change. That's true. People do not change, but behavior can change, and relationships can change, and communication can change. And fortunately, change occurs as a result. I always talk about it in the context of a theory called cognitive dissonance. Cognitive dissonance is when you have an expectation and the reality is in direct opposite of that expectation. An example of that in terms of people might be, you've heard about somebody, you've had a lot of negative feedback about this particular person. You sit down with him in a meeting, or her with a meeting, and all of a sudden you walk away with, hey, that was pretty good. I like that interaction. I actually like that person. So the question is, that individual just went through cognitive dissonance, meaning, are they going to hold on to their preconceived notion, or are you going to accept the reality? Okay, so human beings, fortunately, we accept the reality. So when we're talking about change and you're sitting down and you're talking with another family member in the family business, and you explore that conversation in terms of relationships, what you did yesterday, and people have an opportunity to fully explore and get everything out, quote unquote, and you begin to understand, if you will, the intention of others, and you respond differently, and people start to respond differently. They take that experiential idea of how to talk to one another, and they say, that wasn't as bad as I thought it was. And so there's a reward attached to that. And we know that when behavior is rewarded, it has a tendency to repeat itself. So you take that, that's what's going on during the action state, that level of communication which is increased. And that's, the topic could be a family dynamic, the topic could be a business issue. It doesn't matter. But what does matter is that there's a lot of communication and people listen very, very intently, if you will. So here's a rule during the action stage, okay? The rule is try to understand before you try to be understood.
That's great. That's great. And also, I often see there's some ambivalence to this because obviously any kind of change for an owner in succession and transition planning comes with a sense of loss oftentimes too. That, you know, making these changes is often associated with loss. So there can be some sadness peppered in to actually taking charge, making these changes. And I think the sensitivity of family, of coworkers, those that may have been with the owner for a very long time also experience that sense of loss when actual change is taking place. So many emotions can occur. John, what are you sensing what is going on? There's lots of stuff going on right now when the action stage is implemented. What are owners typically involved with?
They're shaking their hand as they sign documents. And we have to help them write their name or sign their name. No, I just want to. I'm going to get into that action stage in a minute, but I just want everybody that's on the webinar to understand something that I think is a misnomer. Certainly in the exit, the outright sale environment. I have had clients say, well, I'm thinking about selling my company, so I guess I have to have audited financial statements. And that is a very common statement that I hear from a lot of business owners. I'm just going to reflect back on a transaction about 4 years ago plus where that was not the case. We actually did a review level report for the transaction. I'll just be very brief. It was a 6-month preparation to get them to the finish line. It was a 90-day close. It was very large numbers, in excess of $400 million in this particular case. We did the whole readiness assessment, and we did review level, almost like a public company type of report, but we only review level because the other side is going to request a quality of earnings possibly in that type of engagement. But I would challenge anyone that says you have to have an audit done because the buyer is going to do their own due diligence and their own necessary work. So that's just an aside in the preparation stage. But on the action stage, I would say that, you know, to Tom's point, you know, the family members, the people that are in the business, not in the business, I think is really relevant. It's transferring that knowledge base, right, from the founders, the people that the family members have been running the business and growing to what it is. It's transferring that knowledge and those relationships, I think, is really important. It's a discussion that has to happen with the owners. We circle back to what type of succession are we talking about? There are some common threads here with, you know, successional transition or outright sales. Tax efficiency is common, no matter how you do it. Consider a gifting strategy, possibly, maybe coupled with an installment sale type of arrangement with the family, within the family. But all those things really have to start to take form when you want to take action once they get the direction down. We talked about cash flow. Again, the governance structure. Okay, as I succeed the business, if it's two family, what type of governance structure do we need in place? We need the continuity. Are the employees, and to Tom's point about communication, are the employees aware of the succession? Are they comfortable with it? That's a hurdle. It can be a hurdle. You know, we're comfortable with the founder and the family members that have been running the business, but now we got new people coming in, and you know that's a challenge at times. So that has to be certainly discussed. And of course, then preparing all the relevant, you know, ongoing documents for the new ownership, et cetera, certainly has to be considered. So transitioning in and transitioning out is certainly a discussion, and making sure that the I's are dotted, T's are crossed, and making sure it's efficient.
All right, great. On the personal wealth side, Maria, what's going on in this action phase? What kind of advising are you doing, supporting the owners as they are really looking and taking care of their personal life? What's happening here?
So it's so interesting to hear Tom talk about, well, they're communicating better, right? And so they kind of take on this new posture of, we're going to begin to communicate better. We have decided to move forward. So now, in typical business owner fashion, they want to move forward very quickly, right? So sometimes they get ahead of themselves. And so an example of what that would be is business owners at this point, John even mentioned, like, you know, someone says to them, you might want to think about gifting strategies. So they go call a trust and estate attorney. And no matter how great a trust and estate attorney is, right? So their focus is, let's get money out of your estate. Let's use up your exemptions. Let's do it now. We really want those. And Cindy, it's so funny you mentioned that sometimes it's bittersweet and even sad for them. And now we're talking about trust and estate planning. What's sadder than that? So
when necessary.
Exactly. So when they typically start to think about, you know, their estate planning and their trust, it's super important that they don't disinherit themselves. And that's one of the mistakes we see, is they become laser focused on just this estate tax mitigation strategies that they completely overlook their personal cash flow management. You cannot plan for one in a vacuum. That has to be done together. I mean, we even had a recent example. A client's net proceeds were close to $30 million. And by the time they came to us, they were about to, even though they might have been shaking John, to sign the documents that their attorney had drawn up. And we said, well, let us begin at the beginning first and take them through this process. And when we got to that point, what they were taking out of their estate with no opportunity to, you know, for marital access or anything like that, they were going to disinherit themselves. And it doesn't make the attorney bad. It makes the attorney really good at what they do and what their focus is. But again, they need a team around them who's looking at the entire picture. So having enough money on your personal balance sheet that's invested in such a way that it produces enough cash flow, and that it's distributed dynamically, so it's tax efficient, that you can continue to live your lifestyle. And then let's think about trust and estate planning strategies. You know, also tax laws change all the time, exemptions change all the time. An example is this year, and then inflation's going to change, and then you might want to have a large purchase come up, you know, maybe you have a child that's getting married. So there's so many different things, there's market volatility, that have to be taken into consideration and then projected out well into the future before those documents are actually signed. And you want to partner with someone who actually has a system for simulation. There are so many different complex strategies out there. It's a lot, right? So as you're managing your family enterprise, you want to be able to see in an actual simulation, if I choose this, what is it going to do for me from an estate plan, from a tax perspective, as well as from a cash flow? Like, or what if I chose this option? How will that change different things out into the future, and actually be able to see it in black and white before you actually move forward. So again, I know I sound like a broken record, but you have to have a plan. You have to have a baseline going forward, and everything has to go back to what that plan is. And the plan needs to start with really what's most important to you. How do you define success? What does it look like before you move forward and run ahead with action? Because we all know typical entrepreneurs, right? Type A personalities, they're always moving forward. They need a team around them in some cases to kind of pull them back and say, okay, wait a minute. If you take this path, this is where it's going to go. If you take this path, this is where it's going to go, and actually show them in black and white, and then let them make the best decision for themselves.
That's great advice. That's great. Thank you. So now the final stage of change is all about maintenance. It seems kind of boring, but it's certainly an award for getting through all of these stages, taking movement, making change. And now, how do you continue on? And whether it's maintenance or sustainability, I like sustainability a little bit better than maintenance. But so Tom, you can't take your foot off the gas, right? So how does someone continue to move forward from a psychological, emotional perspective and
Yeah,
not lose traction?
yeah, you want to hold on to what you've achieved. I mean, at this point in time, you're successful in terms of the family dynamic has changed, the homeostasis, the condition of the family has moved, and hopefully there's a lot more communication, stress and relationships have reduced, etc. However, there's a couple of things. One, the issues that triggered all this stuff and the individual personalities that trigger different other personalities, that's not going away, okay? But hopefully you've learned how to deal with one another and each other's idiosyncrasies, et cetera, and you develop the quality of communication to get through those issues. So you've learned to not eliminate them, but manage them. And so if something that used to occur 5 times a week, hopefully it occurs once a month, or once every 2 months. And you say, I've been here before, I can recognize it. And then you do what you take your skill set and you apply it to it. The second thing is governance, a combination of family governance and business governance. Family governance is something through something called a family council. They can be family members, both inside the business and not inside the family business. Usually family businesses, their largest asset, most of their wealth is in the business. So, frequently people struggle with, well, what am I going to do? And how do I include working members of my family into the business, et cetera, et cetera. So there are a variety of structures out there, family assembly, family council, et cetera, which provide a forum for dealing with the family dynamics and the family issues to make sure that despite the influence of the business on the family keeps its own sense of integrity. The other side of the governance is business governance, which can be board of advisors, board of directors, and John can, I assume, be able to talk a lot more about that than myself.
So, John, what would be tactics, tools that help the maintenance phase for the private business owner? What things could be in play, as Tom suggests, the governance aspect, and I'm sure there are other things that an owner needs to pay attention to truly sustain the accomplishments achieved thus far.
The maintenance stage is really, this is where I think we can differentiate the maintenance stage depending on the transaction, right? So if it's an outright sale, right, the maintenance stage really is incumbent upon the buyer. And if the owners are retained for a period of time, which is usually a retention period, then they're going to be part of maintaining certain things given the contract. So that's kind of maybe the one-off. But when it comes to family generational issues and succession, to Tom's point, it's all about maintaining the plan as designed and executed. The sound governance and leadership can be assisted by a board of advisors, which is very common, to help the new leadership, take hold of running the business. They're an advisory board. All right, they're there to continue what has been built up all the years, and that's very common. And there's certain protocols and certain documents that you would want to have in place, and there can be independent board of advisors as well. Continued access to the knowledge and the experience of the founders. So they should always be available in this maintenance stage for a period of time, in my opinion, to continue helping the new leadership, because you want it to be successful, right? You went through the first 30 years. Now your goal is to let it continue for the next 30 years and so forth. Monitoring the plan and the actions that were taken. Because again, I don't think there's any perfect plan per se, although we all want to be perfect and we strive our best to do so, but you're going to have some bumps and hurdles that come up, and they have to be, again, it's change, right? You have to adapt and take the appropriate course of actions to keep the plan on course. Transitioning certain functions over time as opposed to a cut and run. We don't want to just cut and run, because I think that's a recipe or an ingredient for failure, or maybe attributable to. So having that leadership continue to be involved, the old leadership, would be important, although we don't want to step on anyone's toes and create animosity. So it's a balance, and I think that's where we all come in to guide them through the maintenance stage. And I think as you get through the maintenance stage over a period of time, 6 months, 9 months, a year or so, then the new leadership will then put in place their own 3-year, 5-year, 10-year forward-looking plans, right, to piggyback and continue what the founders have built. So it's important. I think in a sale transaction, the maintenance stage all rests with Maria. I'll say that, because you pick up and continue that maintenance stage with the owners and the family. So it does depend on the transaction as far as the maintenance goes.
So that's a great segue, Maria. And so what are you considering? How are you assisting in this sustainability phase and maintenance phase with your clients?
To John's point, this is the longest phase we have with our clients, we hope, right? And it's making sure that there's a plan in place, and then a process around how do we bring in the generation behind, and the generation behind that, because most of the time, not all the time, unfortunately, but most of the time, we're in the business, you have to decide, am I going to leave this business to my children, or will my children continue on in the business? Typically with your wealth, those are the individuals who are going to be inheriting your wealth. And so how is it done appropriately? How do you bring them in such a way that when you're no longer here, that there's less chaos for them and less change for them, because they've been prepared for what it was going to look like. It's ongoing, right? The world is changing constantly. No matter, to John's point, no plan is perfect. It's perfect for, we hope, for the moment. And then what is the feedback loop going to look like? How often are you meeting with the individuals who are helping hold you accountable, and you hold them accountable for moving forward to sustain this wealth, and in a lot of cases continue to grow the wealth for the next generations? How do you transfer it in a tax efficient way? And there's so many different options for that, but it's only done well when there's a constant ability to communicate with your team, that you have a team of experts that's looking at everything, not just the capital markets. It's looking at everything. It's looking at your income. Could your income be disrupted if it's invested in real estate, right? Or something else. It's looking at your personal experiences. At this point, your grandchildren are getting married. You want to throw them $100,000 wedding, or whatever the case might be. Is there someone on your team who's constantly taking all these things into consideration? And when we understand what you want to have happen, are they re-optimizing every area of the plan as tax laws change, as capital markets become more or less volatile, as they grow, as they detract? It's just a constant communication.
Well, I love this whole thing around communication, because it is essential. I'm going to ask, I know we're winding down here, we're into Q&A, and I'd love for anyone out there that if you have specific questions, I even wonder where you might be if you're a business owner as you contemplate, pre-contemplate, are already preparing or in an action phase of movement here, where you might be. And so I'd love to throw up to the panelists, and please, participants, audience, throw out some questions. It'd be great if you have any. What do you think is the stickiest stage, panelists? Is there a sticky stage? Is there one that is more challenging over another?
Yes, the pre-contemplation.
I think that's definitely the most frustrating.
Yeah, I would
The
agree
experience
with
is you're
that.
talking to somebody who is not listening. That's the experience.
I would agree with that. I think all the stages
Say that
are
again?
certainly critical and require a lot of time and thought, and i.e. the professional team will help and guide through those stages, because it's like you don't want to put the cart before the horse. So if you didn't address things in the contemplation stage and all of a sudden now you're trying to take action, or preparation stage and you're trying to take action, it's not going to go well. So it's a process like anything else. So I think they're all pretty critical, in my opinion.
And let me ask you this. So one of the most difficult challenges is for an owner to think about what's going to happen to their business. And perhaps how does that implicate or impact the family? I mean, I don't see many owners raise their hand and go, yeah, let me dive right into that, because it's critically important for me to be creating some kind of exit strategy for myself. And so how do you support an owner when that may not be one of the most attractive thought processes going on for them?
I
You
don't
each come from
understand.
different places. How would you each personally address that from your area of expertise?
I'm not quite sure. You mean an owner who's thinking about it but doesn't want to leave the business, or doesn't want to
No,
change their
just
role in the
just
business?
the whole stress of beginning to explore what's going to happen to my business, which is also
Okay.
implicate what's
Okay.
going to happen to me.
Okay, well, this is the reality, actually. What happens is when you move from the pre-contemplation stage into the contemplation stage, if you will, and you start to become aware, and with the awareness can come some stress, okay? The stress is really attached to the unknown, like what's going to happen. That's the most intense driver of stress. Once you make a decision that you're going to do something about it, stress reduces. So just the decision itself that I'm going to do something, and you go back towards someplace where that's called taking charge. When you take charge of your situation, your stress is reduced.
Right.
I don't know how many of you have ever gone into therapy, but once you decide to go into therapy, you're not even seeing the person, and you're going, I just feel better.
Yeah, Tom, I'm gonna echo that thought and those comments, because I couldn't agree with you more. It goes, again, let's go back to basics, right? It's having your professional team lined up to be your counselors and your mentors, and guiding you through the process, by which there will be accountability, communication, timelines, and we're taking all that stress and unknowns really out of the mix, because we're the quarterback. We're executing or helping execute with the owner. So I agree with you. It's the unknown. So if you can hedge that up front, I think it's more than pays for itself from a stress standpoint.
Yeah, I love that comment, John, because, actually, when you come together as a team and you've got a team of people you can depend on that are actually synergized and collaborate effectively together, that's everything. I mean, it was putting on the webinar, you know, coming together as a team made it priceless, so easy. Same thing for any kind of action step you may need to take as an owner. And, you know, Maria, what do you see when someone is struggling? Wealth is so, I mean, wealth is business, you know?
So it's interesting, you know, we have a process we take individuals through, and we know, Tom, to your point, when they've decided to do something, that's when they start sharing their information with us. You know, at the first, you know, when we start asking them, like, what's important to you? And, you know, they can start to communicate what I think is really important to me and what I hope for my future and things like that. But we know they're committed when they start sharing information with us, right? And then all of a sudden we're getting all this information, we're asking them more questions, we're digging in deeper. And then when we take that information and we actually present it back to them in a way that's clear and compartmentalized, but then overlaid on top of one another so they kind of understand what's possible. There's actually a partner at PKF O'Connor Davies that calls that meeting the light bulb meeting. And we literally have seen clients like breathe a sigh of relief in most cases, and we hope for that. Some cases are like, oh my gosh, I'm not going to have enough money, but that gets few and far between. But it's really kind of like that light bulb moment of, this is what I've been working for. I've been spending all this time away from my family and focused on work and just my head down and just running so fast. Now they get the opportunity to actually see what it's created for them outside of the business. And more often than not, they sit in our office or on a Zoom with us and they breathe a sigh of relief and they're like, oh, this is what my hard work has actually created. And you guys are going to make it better for me. And what does that look like? And then they move forward with a level of excitement and commitment that they didn't have before that. It's a great job.
It's perfect. I think that's perfect. I mean, using the term clarity, I think is first of all, it really de-stresses someone when they know what's going to happen. I think all of the fear, Tom, you spoke about it, that comes from not knowing. You know, you don't know what the future is going to hold. When you assemble a team of people together that have expertise, who can collaborate, who can communicate effectively for you, on your behalf, with you, it creates that sense of clarity where you don't have to do this alone. It's ridiculous to even think about trying to do this alone. And when people have clarity, they take charge. And so it makes such total sense. And it's okay not to have clarity, but the next step is being able to say, wait a minute, I can't do this by myself. Who do I pull together that can help me create this plan? And it's a big next step, but it's certainly one, if you mentioned, Tom, the cognitive dissonance. You always think it's harder than it's really going to be when you pick up that phone and you say, hey, could you help me out a little bit here? People are more than willing to do that. And then you begin to assimilate this wonderful team that can help you get through a succession roadmap and actually help you implement it. I mean, there's nothing more important to a family and their business than to be able to do that process effectively. So, you know, I think we're ending here the end of our seminar. I would love for, you guys have been amazing. I can't even begin to thank you enough for your contributions, for your insight to these changes. You're certainly individuals that, you know what they're talking about, and I can't thank you enough for participating in this. I'm going to turn it over to Harleen now. She's got a few things she wants to share with everyone who's on. So Harleen, take it away.
Thank you, Cynthia, and thank you to the rest of our speakers, and thank you everyone for attending today's webinar. Again, please remember to complete the short survey that's prompted at the close of this webinar. And just as a reminder for everyone, a copy of the PowerPoint slides, a recording of today's webinar, and a handout relating to our firm's Center for Private Business Owners will be made available to all attendees via email within the next few hours. Thank you, everyone, and have a great rest of your day.
Thank you.
Thank you, everybody.
Thank you, everybody. Thanks
Have a
for
great
listening.
rest of your day and week.
Thank you, Cindy.
Thank you, everyone. Thank you so much.